What's up, YouTube? Novadella Investment back with another video. It's been a long time since I've done an update on this portfolio, so let's jump right into it. So these past few weeks, I'm not gonna lie, not even the past few weeks, but but year to date, the market has been a little volatile to say to put it I guess nicely. Honestly, it's been very volatile with talks about tariffs and the Ukraine situation that's still going on, right? And inflation fears and the whole nine. So because of everything that's been going on within the economy, the fundamentals are really crushing the markets currently. So I've been seeing a lot of folks panicking. You'll see there's a few YouTubers that I follow who does similar content when it comes to um, sharing their portfolios and their progresses and so on and so forth. And I'm not gonna lie to you, I've been seeing so many people freak out about what's going on. Like people are pulling out of. I follow one particular person. This person is a high yield investment investor. So basically, they invest in a lot of the yield max funds and a lot of the yield boost and curve and Neos and so on and so forth. XDTE, Roundhill, right, and so on. But which is fine. What I'm seeing sheer panic. I'm seeing people trying to are saying they're going to pull out of the market, or they're going to sell Misty, they're going to sell YMAX, they're going to sell all these different covered call ETF that they've invested in because the market has fallen. However, my question is, if this is obviously these funds are not growth uh, instruments, right? They're not. You're not in it for the growth. You're in it for the dividends. So if that's your original thesis or plan, but why would you not buy more when the market is falling at a discount, right? If you intend on collecting um, on just collecting income, then why not buy more when at a cheaper price? Why sell if you weren't in it for the growth anyway? If you're still getting your dividends at this time, are you saying that you no longer believe in your strategy, or are you just panicking because you're seeing a lot of red in your portfolio and it's scary? That's my question to those individuals. If you look at the actual charts, right, before we go into the account update, if you look at the actual chart of the S&P 500, you'll see that yes, we've had a few brutal down days, right, and then we closed the month and the week out with a nice little gain there after a reversal on the 28th of February, yesterday, Friday. So we closed the month pretty, I guess, on a good note on that day. Hopefully that continues into March. But if you zoom out a little bit and look at the actual charts, we're not even close to the 200 um, SMA. We're not even close to the 200 SMA, right? So we might be going down even more. Who knows? But people are freaking out, and we were just at all-time highs. Check this out. We were. Let me adjust uh, my chart here so you guys can see what I'm talking about. We were just at all-time highs. Look at that. We just came off all-time highs. So why are people freaking out? The market is crashing. Yada yada yada. Come on, come on. Now, if you're in it for the growth, obviously, right, your confidence has been shaken a little bit, which is fine. Nice little pullback, but really, you should be looking to buy, or buying more shares of whatever you're holding currently, not dumping your shares and losing all the progress that you've made over the course of your investment time. But if you go back in time, right, we're not even as bad as we were back in August of last year. August of last year was pretty bad. We came really close to the 200, but we reversed and went on to make higher highs. But what I want to say is just calm down, right? Relax. Yes, it's scary. Yes, waking up and seeing another leg down, another red day is gonna be it's gonna be very very scary to anyone in the market, whether you're a growth investor or an income investor. To me, the folks who are holding instruments like SCHD and JetQ and DGRO and things like that, you guys definitely should not be selling because you're in it for the dividends and you're still getting paid your dividends. So why panic? Doesn't make sense to me. Now, if you're in it for the growth, well, I can see how you're psychologically it can get to you, but still, you're in it for the long term, right? These small pullbacks are going to happen. People are taking profits. You're going to have fundamentals that are off. Things probably get overvalued. You're going to get news like I don't know, DeepSeek that's going to send Nvidia crashing for some reason. Or I don't want to use the word crashing, but going to create a pullback in Nvidia for some reason. I don't know what the yes, we hear all the reasons why, right? Competitor, yada yada yada. However, like really, Nvidia is a strong company. It's not going anywhere. Like, what are we doing here? It's the future. So just relax. Don't panic. If you're income investor, hold on, right? If even if you're gonna, you want to pause um, investing, reinvesting your dividends into Yield Max and Misty and all those other funds. Okay, fine. You can pause contributing to those or making your weekly contributions or daily contributions, and pivot into your VOOs or your SCHDs or your more established funds, stocks, ETFs, and so on and so forth. Right until you get the until we go through a real bear market with Tesla and all the cover call ETFs, maybe your confidence might be shaken a little bit. Got it. Just pivot those funds into something that's proven, has a proven track record, and that's been doing this thing for a while. And until you develop the confidence that you can go down and come up, and these things are going to happen. But to just sell off and just lose all those progress that you made over the year or whatever else, that's silly to me. And if you're using margin and that's what's causing you to have those sell-offs, then maybe you need to reevaluate your strategy and try to do something that's more I guess that's more conducive to your psychologically when it comes to your risk tolerance, right? So like I said, this is not financial advice, just something to think about as you're on this journey. I've lived through a lot of what do you call it, bear environments within my investing and trading career. You know what I mean? The 2008, 2011, 2014, 2015, right? 2018, all the tariff wars. 2022, I don't know what that was. That's crazy, right? Right after COVID, and and then now this small little pullback. So don't panic. Market's gonna come back. It's gonna go up. It's gonna pull back. It's gonna go up. It's gonna pull back. Just buy more and keep going, right? And if you're a dividend investor, even better, right? Buy more while it's down, so you can have more value going forward. So let's take a look at the portfolio and see where we're at. We got crushed. With that said, we got crushed, man. We're up to 20. We're up to 21, I think 22,000 in the portfolio, and now we're sitting at 2450. So yeah, we're down, but hey, it is what it is, right? The market goes up and down. So on the weekly chart, as you can see, we're down 4%, right? 4%. So we've lost a total of $597 in market gain. However, we've made up $68 in dividends, which is not bad. On the monthly, we are down $1,389. Woo, 5%. But we made some back in dividends here. So basically, if I was an income investor, right, and I had a bigger account, and let's say I was in a retirement mode, I'm not sweating the market the market gain section here in the portfolio being down, because I'm still gonna be getting paid dividends, right? So if I'm invested in something I truly believe in, like a SCHD, DGRO, and so on and so forth, there's no reason for me to panic because I'm still gonna be getting paid my monthly dividends. I'm still paying my bills. I'm still living my retirement, and so on and so forth, right? So, but if you're invested in something like YieldMax and so on and so forth, then you might say, you know what? I don't know what. I've never lived through a bear market with these darn things, so I feel like this thing is gonna disappear, and I don't know, the ultimate thing's gonna happen, go to zero, and reverse splits and whatever else. So you might be in a more panic mode. So maybe you need to reevaluate your risk tolerance and move on forward from there and move on from there. But let's continue. The last 3 months we are down. Look at that, down 1,600, down 3% on the account, but made it up in dividends again. See, so we're still getting paid. Year to date, let's look at that. Should be around, yep, minus 900, minus 2%. Not bad, right? Year to date, down 2%. All the panicking going on. Yeah, the numbers look off, but look at it in relative to what's going on. So we're only down 2% in the portfolio, and then over the last year, we're up 17%. Right, with dividends, dividends outdoing our market gain, which is pretty crazy. I made a few updates to the portfolio, so you can see. Let's go back to the week and stay there. All right. So you know what? Since the end of the month, we go to the month. So let's look at what we've done so far. So over the month, Visa. I don't know. Every time I open up the portfolio while the chaos is happening and things are burning, Visa is just and Cintas continues to climb for some reason. Not affected by the market at all. Clearly, they're up 8%. Cintas is up 5% on the month. So um, is that a contrary, or just when it comes to correlation? Who knows, right? And then, as you can see, all the others. I'm not gonna go through all the others, but you can see I've added a few ETFs into the portfolio. As you can see, um, got rid of VU because it was really redundant with SCHG. Um, so I got rid of VU because I wanted to allocate more that to more cover call ETFs. Yes, I'm into that now. So I'm dibbling and dabbling into that. So as you can see, I added QQQH. I've added SPMO, which might be redundant with CSG, but oh well, I like it. JEPQ there, QQQI, really nice fund. XDTE, MAGS, AVGO is still there. QDTE, BTCI, and then there you go, Misty, YMAX, and TSM down there at the bottom. YMAX did the ultimate worst, performed even worse than Misty when it comes to market performance this month. Man, at one point Misty was just Misty was just going down, 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 down. Obviously, I mean Bitcoin is dropping like crazy, right down into I think it's down to the 70s now. So there's people panicking all over the place, but we're gonna keep holding, keep chugging. Let's look at what we're doing in dividends for the month and so on and so forth. So as you can see, our monthly average in dividends is $229 per month. So steady going up and down as the months and quarters go by. Looks like this year February is going to be our highest month, and that's because Coney was still in there at the time. I got rid of Coney. But I kept Misty and so on. And then going forward, here's what it looks like going forward. Right, obviously these numbers are going to change as we continue to reinvest our dividends going forward. And take a look at the next 12 months. As you can see, it looks like June is going to be our highest paid month there. And going forward. So that's it. I just want to jump on and do a quick video and talk about the market a little bit, talk about the portfolio. I try to do weekly updates, but it's kind of redundant in a sense, because nothing much happens from week to week really in this portfolio, and the market's been dipping for the past few weeks. But I'll try to do a better job of coming up with different content to talk about, and so on going forward, and probably change the format a little bit. Probably add my, I guess, selfie whatever thing on the screen, and so I can get more personal with you all. But hey, thanks for tuning in. Y'all take it easy. Be safe out there. Diamond hands. Hold on to your to your investment and believe in what you believe in when it comes to your investment strategies. All right. Hey, take care. Have a good one. Peace.